Macroeconomic reports that are slated for release later this week may shake the market. Data from the United States is likely to have a greater effect. It seems that the US economy is less resilient to the Fed's aggressive monetary policy than analysts thought. The already issued reports showed a decline in the manufacturing sector and the labor market cooling. At present, all the publications are considered through the prism of the key interest rate cut. They either support the idea or prevent monetary authorities from taking this action. While at the end of May, the state of affairs favored hawks, now the situation is a bit different. The US dollar has gained upward momentum. As you can see, market sentiment changes amid the publication of important reports. So that you can keep your finger on the pulse, our team is going to prepare video reviews on a daily basis, today for tomorrow. Let us figure out what reports will attract traders most on June 6. You are watching Traders Calendar. On Thursday, traders are likely to pay close attention to trade balance reports. A trade balance measures imports and exports, showing either a surplus or a deficit. A budget deficit means the country's expenses exceed its income. Surplus points to the opposite. The country earns more than it spends. For example, Australia's trade balance is in a surplus. However, in March, exports grew much slower than imports, bringing the surplus down to 5.02 billion Australian dollars. Forecasts suggest a round figure of 6 billion. If this prediction comes true, the Australian dollar could strengthen against the US dollar. Also, this day, two global central banks will hold their meetings. First is the Bank of Japan. There is some intrigue about their possible decisions, fueled by hawkish comments made by the financial officials and the government representatives. For instance, Bank of Japan speakers have noted that rising wages could justify a rate hike. Meanwhile, the Ministry of Finance pointed to weak consumer demand and the still high inflation. Currently, the Bank of Japan's interest rate is at 0.1%. Any hawkish hints could boost the yen. The European Central Bank's rate is set at 4.5%. Most economists expect a quarter-point cut tomorrow. Many Eurozone officials have signaled that reductions could start in June. ECB President Christine Lagarde will also hold a press conference that may bring light to future rate paths. While a rate cut might be negative for the euro, future ECB actions could boost the currency. Additionally, reports on factory orders in Germany and retail sales data in the Eurozone will be released on the same day. Both indicators reflect consumer demand and a key economic driver. A bold forecast of a 0.4% rise after the same decline in the previous period could push up the euro against the US dollar. The forecast for retail sales in the Eurozone is quite modest. After a 0.8% increase in April, May is expected to see only a 0.3% rise. This small gain could be a bearish signal for the euro. Meanwhile, if the US labor market surprises again and the weekly unemployment report unveils a drop instead of a jump, the greenback is likely to seize this opportunity and start gaining value. The US dollar may face some hurdles that could be posed by its northern neighbor. Canada will release its trade balance, which is expected to be around 0.9 billion Canadian dollars. Given that the previous figure was deeply negative, positive changes should cause the Canadian dollar to jump. Moreover, the US trade balance, which will be published later this day, is in a considerable deficit. Forecasts predict it will fall deeper to minus 71 billion US dollars. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in the market sentiment with us. Any comments, questions, and offers are welcomed. We wish you profitable trading and see you soon.